Now for more on Japan's economy and where it's headed, what it's going to mean not only to that region, but globally as well, we're joined by Ed Rogers. He is the CEO of Rogers Investment Advisors in Tokyo. Mr. Rogers, thanks very much for joining us. You've been in Asia a long time. Tell us what this latest spate of good news coming out of Tokyo is going to mean not only for that nation, but really the whole region and the global economy, considering that China and the U.S. have been the economic engines that have been driving the global economy for so long.
Good morning, Sean. Thanks very much for having me on the show. We think that some of the most important numbers we've seen recently is really the earnings season, the conclusion of earnings season. We've seen about a 18% increase in earnings and operating profits at Japanese companies across the board. That's a fantastic number. The day-to-day economic data, nothing's really disappointing. Some numbers might not be as high as some folks want them, but in general, things seem in line with the goal of achieving 2% inflation. So what this means for Japan and what it means for the world is, hopefully, going forward, 2014, 2015, 2016, Japan is able to do its share for the global economy as the third largest economy in the world. If Japan becomes a very productive economy again, it does have national, regional, and international implications.
Well, Ed, you talked about earnings, and really nothing can drive a stock price like solid earnings. So looking at that, there have been a lot of people on the sidelines. Did they miss out? Is it too late to get involved to invest in companies?
Yeah, that's a great question, and we certainly are getting a lot from investors ourselves. Look, you've clearly missed the first leg if you don't have any exposure to Japan. This 2013 has proven to be a great year for exposure to Japanese equities, but our belief is that the party is really still just getting started. We've had essentially 7 years of famine, and we may now have 7 years of feast to look forward to. The TPP, the Trans-Pacific Partnership talks, are a true game changer for this space. We expect to see much more profitability, much better earnings numbers going forward. In the United States, you've had really multiple expansion leading to higher prices, equity prices. Here we have earnings-driven growth, which is a phenomenal way to see prices move on the equity side.
Now, you talked about the trading plan, the U.S.'s much ballyhooed Asian pivot that really hasn't come to fruition yet. With Vice President coming there, a lot of focus. If the U.S. does put its, the focus there that it's been talking about for so long, do you think that this is going to continue to spark this positive news?
Well, there's a certain amount of posturing when we talk about media the pivot to Asia and whatnot. Look, Asia has always been very, very important to the United States. You still continue to see very senior statesmen appointed to positions here. Our view at Rogers Investment Advisors is that Ambassador Kennedy, the new appointment to Japan, is a phenomenal piece of news. It's a true indicator of the importance of Japan, the ongoing importance of Japan to the United States, to the region, to the world. And make no mistake, as someone who's lived in Asia for most of the last 27 years, Asia has always been important, and I think at some level, it's always on the senior level radar screen in the United States. So we expect to see continued engagement, and that will be very positive and productive for the region, for the United States to be focused on Asia the way it has been.
For some reason, despite all the growth in Tokyo, there has been this ongoing concern that Prime Minister Abe doesn't have what it takes to spur on the economy, and he continues to prove his naysayers wrong. What do you make of all this?
Great investment opportunities for us for the most part. It's proven to be a very good year this year, and I think it will continue to be a good year next year. That's sort of what makes a market. People who think it's going to work and people who don't think it's going to work. And you're quite right. Look, easily 50% of the investors we speak to still have a very high level of doubt about Abenomics. Those are the folks that haven't participated at all in the 70% uptick in Japanese equities over the last year. And they may well miss the next 70% uptick. That's okay. They can make those choices, but it's unfortunate for their portfolios, I think, to not be exposed to Japanese equities at this point.
Look, there's a lot of positive news out there. Even China's stocks are trading higher. One thing the markets don't like is surprise. What do you make of all the political tension that's coming out of the ADIZ, the no-fly zone that China just announced last weekend? There's a lot of rhetoric flying around right now. Could that be a fly in the ointment, so to speak?
Is it concerning? Absolutely it is. It's one of the things that we think about, really, military conflict and the chance that there might be a 9 earthquake in downtown Tokyo. Those are my two biggest fears, absolutely. That said, I think there are an awful lot of people who have a significant vested interest in seeing the threat of military conflict de-escalate. I think it's very clear at the highest levels that Japan and the United States have a very strong security pact. And I think it's also very clear that room needs to be made for a growing China on the regional and international scale. Does that mean that we all have to end up in military conflict? The answer is no. Statesmen need to step forward and be statesmen right now in all these countries. And we think that will happen. We do not think that the military escalation will continue, or the conflict will escalate to a military conflict.
Great. Ed Rogers, thanks. I hope you're exactly right on that. Thanks very much for coming in, chatting with us this morning. As always, great information.